Hi there traders, and welcome to Trade the Structure and another video on price action trading. So what I want to talk about today is how to spot a reversal when it's coming. What are the key price action characteristics of a market that you should be looking for, and where to get into for your prime entry setups, okay? That gives you a good risk reward, okay? So what we'll talk about is primarily the price action, what you're looking for, and then I'll show you a couple of indicators and some key things that I'm looking for in a market, uh, where I'm trying to get involved, which is probably the key thing I want to get across to you today. Okay, so what you'll see in front of you is some price action setups of what I'm looking for. So I think with price action, it's important to know, one, your levels, and two, where could people getting caught out? Okay, so you can see in all of these examples, you've got the market might have been trending up or trending down. Okay, so what that's doing when it's starting to trend, just before the reversal plays out, it's building up sellers or it's building up buyers. Okay, so you can see in this first example, you've got the sellers that are starting to pressure in the second example too. They're starting to pressure in. Okay, so they're starting to build up. You've got sellers building up, building up, building up. So all those sellers that are built up are the energy for the reversal. Okay, that they have to, sooner or later, they're going to have to get out to lock away some gains. And the same on the long side. If there's buyers that have been building up, that's the fuel that could drive the market in the opposite direction. Okay, and that's what you're looking for. If it's just got a few little sellers, then don't expect a big move. If it's got quite a few, quite a lot of sellers stacked up, you can expect potentially a bigger move and a bigger drive back up again. Okay, so that's ideally the sort of key parameters we're looking for to start with. The second we're looking at is price action. So in this first example, we've got the market trending down. We've got our anchor. A terminology I use is anchors to the downtrend. So you've got the lower high, anchor, anchor. As soon as we start to see that anchor's broken, okay, we know something could be on the cards. It's not, for me, it's not a reason to get in, because it could easily be a flush of the anchor and then it resumes to trend down. So if you just get in here on the, buy the break there, and your stop has to be way down here, you could easily get stopped out and it could be quite a big loss. Okay, so what you're ideally looking for is that break and then the first pullback. What happens on that first pullback? And if it starts to hold a higher low, that's where we want to start getting involved. Okay, and there's a few, I'll look at some my technical indicators. I'm utilizing the MACD and the momentum. Okay, and I ideally want that MACD to be on the rise from an oversold situation. Okay, so if the MACD is on the rise here and I've get my pullback as the MACD is rising, okay, the first pullback, and it starts to hold a higher level, a higher low, that's where I want to get in, and that's what I term the shoulder. Okay, so that's my ideal entry zone. What we're looking to take advantage of is when all these sellers start to realize they're on the wrong side of the market and they get squeezed out of the action. Okay, another thing that I'm looking for, and it can happen quite a lot, is what I call an RTF, a retest fail. You might call it double bottom, double top, whatever you want to call it. I call it the RTF. You've got the market, same sort of situation. The market's coming in. You've got the RTF forms after the break. Ideally, it's after that break of the anchor to the downtrend. So the break of the anchor, what it does is create that uncertainty with sellers. Okay, maybe they've broken the anchor. It could have flushed a few traders out who've got their stops. They sold it in here. They got their stops above that level. Could have flushed a few out. They could have their stops all the way back here. You don't know, but what that does is create uncertainty. Okay, once it starts to come down, you might get some more sellers coming in. Okay, that don't realize what price action is going on. Then you get the RTF. Ideally, it would be a flush. I've got in this example a little flush of the high. We could get a flush of the low, and it bounces straight back again. And then you're looking for the same situation. Okay, you're ideally looking for your higher low. And it's about when it starts to rally here, you've got some sort of confirmation. Okay, at this stage, we could be just coming into that level again and start to head lower. You don't just buy anywhere in here. You want to buy when it's on the rise, okay? And the same on the sell side. You want to sell when it's on the fall, okay? When it's starting to fall, not on the fall, but when it's starting to fall. After you get that flush, after you get that break of the anchor, and after you get that shoulder started to confirm, okay? So once we get this kind of price action, we're getting the shoulder is starting to confirm, or the higher low in here. We've broken the anchor. We've got an RTF. All those things are key for me to start to look for a buy entry. And on the flip side, start to look for that sell entry, okay? So you can see both scenarios have got some juice stacked up on the sell side or stacked up on the buy side. And that's what we're ideally looking to be squeezed out of the market. Okay, so let's get over to some examples now, both on the 30-minute chart and the 5-minute chart on the Dow. Okay, we've got the 30-minute chart to kick it off with, and you'll see I'll just mark up what I'm actually looking for. So you've got the market that's pressed up here, so it's dragged in some buyers, it's come to a level. We start to fail, so that's the RTF, the retest fail, and then straight after that, we've got a nice little shoulder. Okay, so that's the ideal situation. We haven't particularly broken the anchor to the upside, but you've got this nice little base building in here. The market starts to resume to the upside, and it fails again here. So as soon as we get that shoulder, okay, I'm happy to jump in it. And you can see that momentum starting to tick down. We're sort of coming off that overbought scenario. Once we got the RTF, you've got a lower, you got some divergence there, you might want to call it, a divergence on the MACD, and about where we get that shoulder, that first pullback, the momentum's down, we got the pullback, we've got a bit of a flush high, can't get any higher, and it starts to resume to the downtrend. So what we're looking at is that secondary move down. Okay, look, it didn't go too far. That wasn't a big move. It did start to fade about here, but look, you can see it's got you on the right side of the action. You've got a little gain, some gains you can lock in there. I mean, if we start to measure that, maybe your risk is somewhere around 200 points there. And on the downside, you've got somewhere around 400 to 450 points to lock in there. So you've got probably at a one-to-one trade there. Now, just realizing this is a 30-minute chart, so there's going to be some bigger moves you're looking at. But they all, when you're looking at the different charts, it's basically the same thing. Okay, you're looking for the same structure, and you're looking for the same sort of payout: 1-to-1, 2-to-1, 3-to-1. Okay, if you get it wrong and you get a 1-to-1, it's still a 1-to-1 trade. Okay, if you get it right and you get a big move, then that's ideally what you're looking for. Okay, we'll go across to the left. You've got this move down, and it's been, you can see it's been trending down for quite a bit. This is only a minor. You're sort of looking for that base, okay? But what you're doing is looking for a very, very similar structure. So if I'll take that off. What we're looking at here is that you've got the move down, okay? Pops up, presses down, goes into new low. So essentially, what you've got here is the anchor to this move down, this leg down. So you're forgetting that you're just really looking at this leg. You're forgetting that it has been in the downtrend for quite a while. So there is a lot of juice. If it starts to work its way back up, there could be a lot of people getting squeezed out on the upside, okay, let alone just this move down. Okay, so then you've got the break of the anchor. It comes down, and essentially you've got that RTF here, and then what you're seeing on the right-hand side is that higher low, or the shoulder. And look what we see on the MACD. We're going from sort of those oversold situation. The MACD is starting to roll up, so the momentum is starting to go up on the upside. And then it's about here, once you start to get that shoulder after the RTF, after the anchor's broken, you start to get a lot of these sellers just in here that realize they're on the wrong side of the market, and they could get squeezed out quite easily. Okay, so if we start to look at that risk there, the risk profile, you've got about, say, 300 points, 280, 300 points on the downside risk for a potential payout. I mean, if you're going all the way back up here, that's fantastic. But as it turned out, before you get some sort of risk, when it starts to roll, you've got a 240 point, or say 200 points, sorry, 400 point rally on the cards there. All right, so the fact that it actually continued on up, if you had your risk below here, it pressured up, and if you held it, you managed to hold it, and then you've got this continuation up here, and you've got much of the same sort of scenario there. You've got the markets come into a level, didn't break the anchor to the uptrend, grinded its way down here. You've got another little shoulder that started to play out, and then continuation up. Okay, and on this one, you could have done a similar kind of thing. You've got, whoop, that's not what I was looking at there. You've got risk of somewhere around 220 points, say, for a payout before it really turned around, 300 points there. Before you go all the way back up here, up to this high, you've got 760 points there on the upside. So you can see how you get on the right side, it could really start to expand. And what you're ideally looking for is a big squeeze of sellers in this scenario. Okay, we'll go across to the right, see if we can find another one here. Now we've got on the short side this time. Okay, so what I'm looking at here, we just mark it up. We've got a bit of a flush. This level was a good little level. Actually, it was from, there you go. You can see that. Tested it, broke it, retested it from underneath, retested it from underneath again. And what we did is popped up above that level. Okay, so we're only really concerned about the price action. We don't mind if it's above the level, because it can easily push up above the level, consolidate, and then roll over. Okay, so what that's doing is bringing in some buyers, and then all of a sudden it dumps on them. Okay, so what you're looking at, we've got our criteria, we've got our anchor to the uptrend, potentially, we'll just take this out here, potentially about this level there. Okay, you've got the move up, continuation, high low here, started to press up and failed. So you got through the anchor there. Okay, the first, we've got a bit of a pullback up there. You can see that MACD is on our side there. We've got sort of that overbought area. It's starting to roll over. The sellers are starting to come in, and then you've got the momentum is down. It's quite clearly it's heading down, and you've got your shoulder to come into. You're below your EMAs, which is great, and then you start to roll. Okay, so you can see that there was another good one on the downside. Start to squeeze. You know exactly where your risk is. You can trade this one here. Ideally, you've got this little inside level, so you could have easily traded, if we can box that up there. I'll just drop that out. There you go. You can box that up, break through the low. You've got a risk of somewhere around, say, 180 points, and payout even into this low gives you about 120. It follows through the low. You can see it starts to build up all the way down to potentially start to reverse here at around 470 points. So you can see that that was easily 2-to-1 on that trade there, that short side, okay, as we squeezed out some of these longs off essentially that RTF we were talking about. Okay, so now let's get across to the 5-minute and just show you the same sort of price action on a 5-minute chart. Okay, here's the 5-minute here. We'll go over just a couple. We'll start on the far right-hand side. You can see there's a shoulder here. Now, this one was a bit of a deeper move down, but you've still got, you've got a nice little RTF off a key level. Like what I was saying before, you've got to know your key levels, okay? So we've come flying into this key level here and reacted back up. So you can see the momentum was down. It's coming back up. We actually have one here, which we'll talk about in just a moment. It's coming back up. Momentum's up from that, so oversold territory. The first pullback here, it starts to hold the EMAs. It starts to rally back up. And at this stage, that anchor was right up here. So you can see, look, it's a big move. There's quite some wide moves there. It did flush that that zone there before it broke up and it broke the anchor. So it's broken the anchor to the downside off an RTF. We're getting at shoulder. Ideally, with the buy, you want your shoulder to be above the EMAs. With the sell, you want the shoulder to be hovering below the EMAs. What I look for anyway. Momentum's up. You've got a break to the upside. You know exactly where your risk is going to be. You can pretty much box that up like that. And you can see that that trade actually kicked off, kicked off quite nicely. You probably have about 113 points risk there. And look, you could have got easily 2-to-1, 3-to-1 on that one as well. Okay, so let's go across to the next one. The next one is just on the downside to that. But essentially, we've got the same sort of thing. We've got the RTF up here, off a key level. You've got the markets moved down, pressed up into a level, started to fail. Okay, momentum's down. We're under the MAs. We've got our shoulder. Okay, little shoulder trade there. We box it up and away we go. We box it up like that. And you can see that was 2, 3, 4-to-1 even, all the way into that low. Now, you might have got flicked out here. If you could have held it right into those lows, you might have taken some off. You might have taken a partial. But either way, we've got the same sort of setup. We've got momentum in our favor. The shoulder's playing out after the RTF, after the failure, and we're getting our trade set up. Okay, so we go across further. Let's go on the buy side there. So this is not off it's off a minor RTF, okay, but it's not the same as this kind of price action. But it's off a very extended market to the downside. It's quite clear. It's well extended into the sell. We've got our RTF here. We've got our break of our anchor. You can see that's essentially the anchor just in here. We've got that break. Now, this might have been a bit tougher to take, but it's still the same sort of scenario on a smaller scale. So I mean, you could have traded this off a 1-minute chart, whatever you want. You could just trade it purely from the 5-minute chart. So you got your initial pop up, break the anchor, your pullback, holding above the EMAs, take the break of the top side. You might have had a little boxed it up like that. Box it up like that. You buy the break of the top side, your risk is below, and then you see where it goes to. Okay, but it's essentially got the same sort of price action set up. Okay, momentum's in your favor, break of the anchor, your shoulder, away you go. Okay, so we get the last one on the cards here is we'll just get this drawing up, and there's again your RTF. You can see it's failed quite a few times, failed off there, pressed back up, failed again, tried to go from a higher level just in here. Okay, a higher low. You can see higher lows holding, flushes that level. That's a beautiful trade for me. And what I love to see, you get that flush, finishes straight back below on that 5-minute candle, and then you're looking for that that move lower. Okay, so essentially this is the anchor to the uptrend. You could have traded it off this little anchor here, but that's not really the setup. You could have traded it off here. The same sort of thing, but the bigger move is that's the break of the anchor. You've got to move back up. It's broken only by a few points. It's come back up. You've got your shoulder, and you can see momentum's in your play. About here, momentum was just rolling over. Probably a tougher trade because it could have easily come off that support zone through here. Could have easily bounced and reversed, and you get stopped out. But the bigger play was once you got that break of that level and it comes up, everyone who's expecting it to rally again, once they start to see that shoulder play out, they're nervous. Okay, so if you're long anywhere through here, you're starting to get nervous. You're going to have to chase your tail. You're going to have to sell into the market. That extends that move down, and that really starts to kick off. And you've got the bigger move is that failure, bigger move, all these longs built up, and they're going to start to get squeezed out. Okay, so that's the move down there, and as you can see, eyeballing that easily 2, 3, 4-to-1. Okay, so that's the setups that I was trying to explain. I hope that you got some value out of that. Now, I find these setups really key, okay? So if we just go back to that picture, if I can draw that, this is what I'm seeing as key price action, okay? So take a note of that and just, look through your charts, look through, RTFs are prime, retest fails, they're prime for me. You can get them just like this, where the market comes down, breaks the anchor straight away, there's no RTF, and it starts to reverse. That's great. That's the same sort of scenario. I think this is even, you're just adding that extra bit of confirmation to the trade when you get the RTF. Okay, and I find that's a really, really powerful tool. The RTF followed, after the break potentially of the anchor, followed by the shoulder, and away you go. Okay, so that's it. That's all I want to discuss. Hope you got some value out of this. And yeah, like I said, look through your charts. Look to just take some paper notes of the actual setup. Go and look through, find the setups yourself. If they start to work for you, that'd be fantastic. But have a look through. You'll see that there's going to be many, many scenarios as a setup. They really do pay out quite nicely when they do play out. And if you get on the right side, it's it's a really, really powerful move. Okay, so it'd be great if you can leave us a like, give us a thumbs up. All right, guys, speak to you again soon.